Good morning, all. Once again,
Good morning, Naveen.
Morning, Naveen.
hope I'm audible to everyone. Yeah, sorry. Okay. So yesterday we discussed about the basics, not yet completed, the basics of what they mean by account, accounting, accountancy, correct? What do you mean by debit and credit, basics of account? What is a thumb rule of account, right? So we know that, right? What is the entity concept in accounts, right? Next one, we discussed about how many types of accounts, right? What do you mean by personal account, real account? I think we have completed, and nominal account. In real account also, what do you mean by an asset? How many type? What do you mean by an asset? How many types of assets we have normally? So we have further more assets, but we will discuss slowly, like when we come to asset accounting module. So we'll discuss in depth on fixed assets, types of fixed assets. Okay, so here, what do you mean by current assets? We discussed. What do you mean by fixed assets? Again, we have a further divided into fixed assets also. Again, I'm going to continue here. Okay. Again, fixed assets. When I talk about fixed assets, fixed assets are further classified into two types. Okay, one is tangible fixed assets, tangible fixed assets. Okay, and second one, intangible, intangible fixed assets. Okay, simple. It's a name itself is indicating what what do you mean by fixed assets? The assets which cannot be converted, right? Within 1 year time. That is nothing but from preparation of one balance sheet to another balance sheet or within one fiscal year. So then those assets are nothing but your fixed assets. And the fixed assets are further classified into two types, tangible fixed assets and intangible fixed assets. So what do you mean by tangible? Right? The fixed assets which we can see and which we can touch. Clear? Then those assets are nothing but tangible fixed assets. The assets, the name itself, tangible, the nothing but which we can see and touch. Then those assets are nothing but your tangible fixed assets. So you can take here furniture is a tangible fixed asset, building, tangible fixed assets, land, tangible fixed asset, machinery, tangible fixed assets, computer, tangible fixed asset, car or motor van or whatever. So it is nothing but a tangible fixed asset. What do you mean by intangible fixed assets? Okay, that is an asset for the business, but which we can't see and which we can't touch. Only we can feel, right? For example, those assets are your goodwill. Clear, nothing but brand name, which we can't see that brand. Clear, which we can't touch, right? Then it is an asset to that particular business. Blindly customer will buy, customer will take the services blindly, so then that is considered as in goodwill, everybody knows it. Next one, patents, trademarks, like that, which we can't see, but it is an asset for that particular business. Trademarks is nothing but Nike symbol. Clear, like that. Okay, so Audi, that circles, right? So these are nothing but intangible fixed assets. Clear? So tangible fixed assets are further classified into two types. One is tangible fixed assets, intangible fixed assets. Clear? So next one, yesterday we discussed about capital, right? So capital is an asset or a liability for us in the sense now hereafter we need to consider ourselves as a company or a business or whatever. So capital, is it an asset or a liability?
Liability.
Right? Why liability?
We need to pay a return back to
Owner.
owner.
Correct. That is nothing but liability, right? Something which we need to repay back. Clear? Then that is nothing but a liability. Now you understood what do you mean by goods and an asset, the difference between good and asset. Okay, so something which we purchased with the intention of resale, with the intention of resale, or your nature of business is reselling. Clear? Then that is nothing but your goods, right? And something which you want to use it for your business purpose, then that will become an asset, right? As I said yesterday, electronic dealer. Computer is, for an electronic dealer, computer is
Asset.
computer, electronic. He is dealer of electronics, Bajaj
Sorry,
Electronics.
good.
Because he will purchase computers and he will sell computer, right? For an electronic dealer. For an electronic dealer, washing machine.
Asset.
Electronic dealer, that is an electronic.
Goods.
Goods only, right?
Goods.
Yeah, that is also an electronic. Same thing if I say electronic dealer, furniture,
Asset.
Asset.
asset. Simple,
Assets. Yeah.
right? So asset is nothing but, okay, something which business owns. Something which business owns. And something which business owes. Business owes. Clear? So what do you mean by an asset? Something which business owns. And what do you mean by liability? Something which business owes. Clear? And there is a concept called debtor and a creditor. Now you understood, right? What do you mean by an expense? What do you mean by loss? Something which we
Yes.
are getting you are spending some amount and you are getting a return benefit. Then that is considered as an expense. If you are spending some amount and you are not getting any return benefit, then that is considered as a loss. Simple. Clear? Next one, we have a concept called, it is very important. Everybody knows it, but still I am reiterating for everybody's benefit. So here, debtor. It's a debtor. Okay, it's not debtor. B is a silent in this. Debtor. Okay. Who is a debtor? Who is a debtor? Okay. The person, I'm giving in a commercial language, the person who owes something from the business. Who owes something from the business? Who is the business here? Or I can make this as,
Business.
sorry? Who is the business?
Business is we are the business.
Always think it we. Okay. The person who owes something to the business means who need to pay us. Who need to pay us. For example, sold goods, okay, to Ram on credit 10,000. So what we did, okay, we have sold some goods to Ram, okay, on a credit basis. So we have a goods to him on a credit basis, and he said that he is going to pay after a month or 2 months or 3 months, right? So 10,000 worth. Clear? Then who need to pay us?
Ram.
Then Ram is considered as a debtor to us. Ram is considered as a debtor to us. Okay. And something which we need to receive. Something which we need to receive. Is it an asset or a liability?
Asset.
Asset. Something which we need to pay in future, then that is considered as a liability. Something which we need to receive in future, then that is considered as an asset. So debtor is considered as an asset. Debtor is considered as an asset. So here, how many, from whom we need to receive? From whom we need to receive?
Ram.
Ram is debtor. So normally what happens is in our day-to-day transaction, we are running a big business, right? And normally we will do number of credit sales to different persons, to different persons. So for example, you have sold goods on credit to 1,000 members, 1,000 debtors. I'm talking it as 1,000 customers, 1,000 debtors or credit customers. So whenever your management is asking, I would like to know how much amount I need to receive from debtors. When I say debtors, is it one person or a number of persons? How many people are involved in this? How many customers I need to receive the amount?
1,000.
Many,
1,000,
many,
right?
yeah.
Many, right? So normally in our day-to-day business, we will do that. Our business itself, nature of the business is credit transactions. Clear? So any Bajaj Finance, if you take, right, they will do a credit sales, majority, 90% sales, they will do on a credit basis only, right? So whenever they want to generate a report, so lakhs of people they will sell in a month, they will sell lakhs of people on a credit sales. So monthly they want to see the statement, how much credit sales, how many customers they have done, how many customers, not whom they have done, how many customers they have done. So they want to see the statement. So it is not possible to show all the 1 lakh customer in the list. Clear? So what we will do is we will club all the debtors, all the credit customers, right? Customer 1, how much amount we need to receive. Customer 2, how much amount we need to. We will club all the customers or all the debtors. So for example, after clubbing all, so 10 lakhs rupees we need to receive. How much amount we need to receive? 10 lakhs. 10 lakhs, is it from one customer or number of customers? One debtor or number of debtors?
Number of debtors.
Number of debtors. So why I'm clubbing all, in the sense in my balance sheet, right? In my balance sheet, I can't show all the lists. I will maintain a separate account for customers. But whenever I am generating a report, right, I can't show the list of all the 1 lakh customers. If I show that, then I need to prepare number of pages of my balance sheet. So what I am doing, I am clubbing all the debtors, and I am showing the total debtors amount. So whenever we combined, so if I write here debtor, debtor or debtors, so which means that it is only one debtor. If I mention it as in debtors or debtor, it will become only one debtor. So do I need to receive from only one debtor or number of debtors? Only from one debtor or number of debtors?
From
10
number
lakhs
of
rupees.
debtors.
One debtor.
Only one debtor. This
Yes.
10 lakhs rupees, do I need to receive from one
No.
debtor?
From number of
No,
debtors.
when we mention
No,
debtor,
I'm
then it
asking
is one.
simple. If I see here, when I say 1 lakh, okay, do I need to receive this 10 lakhs from one debtor or number of debtors?
Number of debtors.
Number of. So here
Yeah.
when I say here debtors, then it looks like I need to receive from only one person. So what we did, we have clubbed all the debtors, right? We have clubbed all the debtors. Means all the customers we have clubbed, and we have mentioned the total amount how much we need to receive. Then what we do in SAP, not SAP, in accounting, we call it as a sundry. Remember this. Sundry. What do you mean by sundry? Wherever you see sundry is nothing but a group. Sundry means what? It is a Latin word, which is not an English word, which is derived from a Latin word. Sundry means in English group. Okay. So sundry is nothing but a group of debtors. Clear? Sundry means group of debtors. Clear? So that is nothing but whenever I say 10 lakhs and when I say sundry debtors, then what does it mean? If I only write a debtor, then it is considered as an one debtor. But when I prefixed with sundry, then what does it mean? It is not from one debtor. We need to receive from number of debtors. Is this clear, everyone? Sundry expenses. What does he mean by that?
Group of expense.
Group of expenses. It's not one expense. Group of small expenses. Clear?
Even sundry debtors and trade receivables are both same, or
Yes, in
is it
SAP,
different?
see, sundry debtors in normal general English, we call it, sorry, normal accounting academic, we call it as a sundry debtors. I'll tell this again if people, so in SAP, we call them as a accounts receivable. If you're not having a issue, if you're having any confusion, leave it now. We call it as an accounts receivable. Accounts receivable, the same term, receivable, or we can call it as a trade receive. Now accounts receivable we are not calling in SAP. Earlier we used to call as an accounts receivable, okay, or sundry debtors, right? Now we call it as a trade receivables. Don't go with the spellings. Trade receivables. Clear, everyone? So don't get confused. You know, now try to just understand what do you mean by debtor, what do you mean by sundry debtor. Debtor is an asset to the business because something which we need to receive, right? Business in the sense we, right? So in SAP terminology, we call it as an accounts receivable or trade receivables. Clear? Now we are no more calling as in sundry in SAP. Okay. So next one, we have one more term, sundry creditors. Okay, debtor and creditors. Without this, no business will run, no company, no business, no organization will run. So then what do you mean by creditor? Opposite to this. Okay. Okay, to the person or from the person, okay, business owes something. Means what is business owes to him? Who is a creditor? To whom business owes. Means we need to pay. We need to pay to someone whom we need to pay, the person, then that person is known as a creditor. Clear? So for example, purchased goods or services, goods from Raju on credit. Okay, on credit 50,000. Right? What we are doing, we are purchasing goods on credit. Credit is nothing but we are not paying immediately, we are going to pay future. Clear? Then that person is considered as a creditor. Now who is our creditor here? Raju. Are we paying immediately? No. We are promised that we are going to pay after a month or 2 months or 3 months. So till that, okay, we need to pay him. Then something which we need to pay is considered as an asset or a liability. We need to repay or we need to pay. We need asset.
Liability.
Simple. So something which we need to pay someone, then that will become. So here Raju is a creditor. Okay. Creditor. And he is considered as a, is it an asset or a liability to the business? For us.
Liability.
Liability to the business. Clear? And when I say creditors 50 lakhs. Okay, 50 lakhs. So do I need to pay one creditor or number of creditors here?
Number of creditors.
No, I said only creditors.
Yeah, one.
Only one. If I prefix with sundry.
Yeah, number of.
Group of creditors. Clear? Group of creditors. Sundry is nothing but group. As I said that, sundry receipts, sundry payments, small payments, your newspaper bill, tea bill, or snacks bill in normal in business, we will write as sundry expenses, sundry payments, sundry receipts. Clear? So this is nothing but sundry means a group. Creditor is nothing but to whom we need to pay. Okay. To XYZ, not only purchase, you borrowed from him. You need to pay. Right? Then that is nothing but a creditor. Do you understand? Majority people have a confusion. Means I'm not saying this one, but majority people have a confusion between a debtor and a creditor concept. Clear, everyone? Any questions on this? Any questions before I go to the next? Yes, no.
No, sir. No, sir.
Okay. So what do you mean by transaction? What do you mean by a transaction? Transaction is nothing but happening of an event. Happening of an event. Okay. What do you mean by transaction? Event in the sense, whatever it happens in general. Okay. Whatever it happens, it is considered as a transaction in accounting terminology. But that event should have money or money worth. Okay. Anything it happens, then that is considered as a transaction in general. But according to as per accounting terminology, whatever it happens, if it involves money or money's worth, commercially involved, then that is considered as a transaction. Purchased goods, paid rent, received commission, right? Paid wages, anything here, paid, received, right? So what is involved? Commercially, something money is involved, right? Your cash or cash worth will be involved. So then that is considered as a transaction. And the transactions are of three types. Transactions are of three types. I will discuss only two types right now, and later I'll discuss one more type. Okay. Transactions are of three types. First one, cash transactions. Cash transactions. Next one. Okay. Credit transactions. Okay. Next one, sorry, this is B. Okay. Next one, non-cash transactions. I will talk this non-cash transaction later. So what do you mean by a cash transaction? Okay. What do you mean by a cash transaction? Okay. The transaction which involves immediate cash. Immediate cash means nothing but you purchased and you paid the cash. Clear? You paid the cash. You purchased the goods, you paid the cash. You went to a restaurant and you paid the amount after. Clear? So that type of transactions, right? That type of transactions is known as a cash transactions. Clear? Any questions here? What do you mean by cash transactions?
No, sir. It's clear.
Yeah. Thumb rule. Okay. Thumb rule. Not required. What is the thumb rule in the sense? For cash transactions, the persons or entities details are not required if it's mentioned in the transaction we need to ignore. Simple, I'll tell you, we need to ignore. So what exactly this means? The transaction which involves immediate cash, then that is nothing but a cash transaction. And what is the thumb rule of cash transactions? For cash transactions, okay, for cash transactions, for example, you went to a restaurant, you had your breakfast or dinner or lunch, and you paid immediately the amount. So does he require your details?
No.
Absolutely not. We won't give anything. For example, you purchased some what we call refrigerator in Bajaj Electronics. You purchased a refrigerator in Bajaj Electronics, right? On a credit basis. On a credit basis, we purchased. So does he required all the details of us or not?
Yes.
Yes.
Because he need to get the money from us. So what do you mean by that? Simple. What I'm saying here, if it is a cash transactions, right, then the persons or entity details not required. We are receiving the cash and we are giving the product or service. Clear? At that particular point of time, only name is required or some basic details, right? Only for warranty and guarantee purpose. That's it. But other details are not required. Your bank details or your PAN details, those are not required. Yes or no? Right? So for example, I'll tell you one transaction for cash. Okay. For examples for cash transactions. I know everybody knows, but still I'm just refreshing this. Okay. So for example, purchased goods for cash. Okay. What kind of transaction is this? What we did, we purchased goods for cash in the sense we have purchased goods for cash. What kind of transaction is this?
The immediate transaction, cash transaction.
Cash transaction. Next one. Sold goods for cash. Sold goods for cash. We are selling goods. Who sold this? Purchased in the sense we purchased. Sold in the sense who sold? We sold the goods. We sold the goods on cash basis. So we have taken cash and we have given the goods. So what kind of transaction is this?
Cash transaction.
Simple. Next one. Purchased goods from Mohan on cash. What kind of transaction?
Cash.
Same
Cash.
cash.
So do we need to consider the person name here?
Not required.
Not required. Because it is a cash transaction, we can ignore the person name. Right? So now you got it, right? So same thing. Sold goods to Krishna for cash. This one,
Same cash transaction.
cash transaction. So we need to consider Krishna's name.
No.
Not required. As it is a cash transaction, we can ignore Krishna's name. So second one, the most important, credit because majority transactions nowadays on a credit basis, right? What do you mean by credit transaction? Okay. The transaction which not involves immediate cash. Okay, immediate cash. The payment, okay, immediate cash, the payment or receipt, okay, will be postponed to future date. Then that type of transactions are known as credit transactions. Okay, understood now? So we purchased now and we promised that we are going to pay after a month. So we are doing a future payment. We are promised that we are going to do a future payment. Or we sold goods and the customer said they are going to pay in future after 2 months. So this is nothing but future receipt. We are not receiving immediately. We are going to receive that amount after 2 months. Then that type of transactions are known as a credit transactions. Clear? So what is the thumb rule? Okay, thumb rule. we need to consider the person details or entity details mandatory. Entity details mandatory. Clear, everyone? Any question on this? The transactions which not involves immediate cash, the payment or receipt is postponed to a future date, then that is considered as a credit transactions. Clear, everyone? So for example, if I take, okay, same example I'll take. Okay, credit transactions. Okay. So here, purchased goods to Mohan on credit. So what do you mean by this? Simple. Purchased goods, okay, to Mohan on credit. So here credit is already mentioned. Then what do you mean by that? Is it a cash transaction or a credit transaction?
Credit transaction.
Credit, simple. So same thing, second transaction, sold goods to Krishna on credit. It is also a credit transaction. One more type. Purchased goods from, okay, from Suhas. That's it. Purchased goods from Suhas. Is it a cash transaction or a credit transaction?
Cash transaction.
Credit transaction.
Yeah. Why credit? I can say that there is no cash involved. Cash is not mentioned. But what is mentioned? Person is mentioned. If cash is not mentioned, person name or entity name is mentioned, then that will become a credit transaction. Understood? Here they have clearly mentioned it's a credit and here it is a cash. But here in this particular transaction, purchased goods from Suhas. Okay, so not mentioned whether it is a cash transaction or a credit, right? Then thumb rule, as I said, that whenever the person name is mentioned or entity is mentioned without mentioning cash or credit, then it will become a credit transaction. Means we have purchased goods from Suhas, right? Means we have not yet paid any amount to him. So we are going to pay in future. Clear, everyone?
Yes, sir.
Yes.
It is nothing but a credit transaction. So same thing. Sold goods to Vijay. What kind of transaction is this?
Credit and
Credit.
Credit. Next. Purchased goods. What is this? Here, no entity or a person name mentioned and not a cash or credit is mentioned. Then what kind of don't go with the non-cash. It's not okay. I've not yet discussed non-cash. So what kind of transaction?
Credit purchase?
Did you mention?
No.
No. Any person name mentioned?
No.
If it is credit purchase, compulsory we need to have what? Entity
Person
or
name?
Name
entity
or
or person name, mandatory. But in this transaction, is it mentioned?
No.
Then what does it mean?
Mm.
If nothing is mentioned, right, then it is considered as a cash transaction. Purchased goods, right, worth rupees 10,000 or whatever it is, but no credit, no cash, no person name, no entity name, then it will become a cash transaction. Nothing but purchased goods for cash. Clear, everyone? Understood? Thumb rules. That's the reason I mentioned thumb rules. Right? Here, no person is mentioned, no entity is mentioned. Then it will become a cash transaction. Clear?
Yes, sir.
Yeah. Next one. Sold goods. This is,
Cash
Cash
sales?
transaction.
that's it. Next one. Paid rent.
Cash transaction.
Paid in the sense we will pay in cash only, right? Cash in the sense that could be cash or check or whatever it is, but we are paying. So that is nothing but cash, received commission.
Same cash transaction.
Cash transaction. Now you got the clarity between cash and credit transactions.
Yes.
Okay, so this is important. This is important because we need to understand cash or a credit transactions. Next one. So till here, any questions? Goods, capital, right? These are the basic terminologies we need to remember. And apart from that, we need to remember few more things. Let me accounting cycle. Every business or every company will follow accounting cycle. Accounting.
Naveen, what is that non-cash transaction?
That I said I will discuss in our asset accounting. Your depreciation, clear, and all the stuff. If I say it is now, so probably it's over and above. In our asset
Okay.
accounting module, I'll discuss on non-cash transactions. Okay.
Yeah, sure.
So here, accounting cycle. So what exactly accounting cycle is? For example, what every business or every entity, every company will do in the sense, for example, there is a concept called financial year. The years are classified. For example, year, you know what do you mean year, right? The years are generally classified into two types. One is calendar year. Next one, non-calendar year. Non-calendar year. Okay. So what do you mean by calendar year? Okay, Jan to December. Okay, any year which is consist of January to December. January to December. Those years are considered as a calendar year. Clear? Calendar year, Jan to December. So in normally we have one more I would like to discuss. Okay. Accounting year. Okay. Financial year. In SAP, we call it as a fiscal year. Okay. So here we have a term called accounting year, financial year, and fiscal year. So the naming is same. Fiscal year, we call it as an SAP. In SAP, we don't call it as a financial year or accounting year because SAP is from Germany. So we call it as in Germany, fiscal means accounting or financial. Clear? So here we call it as a fiscal year. SAP is a German product, right? So accounting year, financial year, fiscal year. What do you mean by this? Okay. What do you mean by this? Right? Every year we will maintain books of accounts. Okay. Books of accounts. Okay. The year from the year where the books of accounts are opened and closed. That year we call it as accounting year or financial year or fiscal year. Understood? From the year where the books of accounts are opened, right? So normally India normally in general, Indian accounting year. Okay, Indian accounting year. Indian accounting year. In India, whatever businesses are there, whatever companies are there, right? So they will follow Indian accounting year from April to March. April to March. Correct? Everybody knows it. April to March in India. When it comes to US accounting year, okay, starts from, or US financial year starts from January to December. Okay, so most of the European countries, most of the Europe, not all, and US also, not all US companies, most of the states in US follow their accounting year, financial year from January to December. Okay, most of the Indian companies, Indian businesses follows their books from April to March, their accounting year or financial year, fiscal year, April to March. Next one, European countries. Okay, they will follow most of the European countries. I'm not saying all. Okay, July to June. Okay, most of the Australian companies, Australia, Singapore, New Zealand, okay, they will follow October to September. Clear? So Indian companies, most, I said majority, will follow their accounting year from April to March. US Jan to December. European countries July to June. Australia October. There are many other countries they will follow in a different. Nepal will follow in different way, right? Sri Lanka will follow their accounting year different way, right? So here when I said April to March means, what do you mean by that? My accounting year for Indian company, if I take Indian company, one Indian company, if I take Reliance, okay, if I take their accounting year starts from 1st April, okay, to last day would be 31st March, 1st April to 31st March. 1st April to, that means, what do you mean by that? They will start every financial year on 1st April and they will close on 31st March. So if you take any US company, for example, Microsoft, they will open their books on 1st January and close on 31st December. Clear? For that particular year. European countries, they will, for example, SAP, okay, SAP AG, they will open their books on 1st July and they will close on 31st. If you take BMW, same. BMW is a European company, German company, right? So they will start their accounting books on 1st July and close on 30th June. Clear? So like this, whatever. So what do you mean by that? 1st April to 31st March. So here books will be opened, Indian company, when every year they will open a separate set of books. For example, here 1st April, in the sense 1st April 2024. 1st April 2024 to when it will close 31st March 2025. Means, so they will open a separate set of books to record the transactions, whatever happens from 1st April to 31st March. 31st March, I'm sorry, spelling. Okay, 31st March. Okay, so they will open a separate set of books. Once it is done, okay, they will close the books on 31st March, and again next year they will open one more set of books on 1st April 2025, okay, to 31st March 2026. Every year, every company, every business, small to big, they will follow like this. Understood? When the books of accounts will be opened, the first day of the fiscal year or the first day of the accounting year, the first day of the financial year, the accounting books will be opened. And when it will be closed, the last day of the accounting year, the last day of the financial year, the last day of the fiscal year will be closed. Is this clear? Is this clear? Any questions on this? What do you mean by an accounting year, financial year? On what basis they will decide mine is April to March? So according to your country, which country your company is situated. Clear? So Any questions here?
No, sir.
Right? Hope of this who are financial year, fiscal year. Yes, no.
Here, Naveen. No.
So here in between, whatever open of books to close of books in accounting, there would be some processes there. Clear? Every year they will start with first one, they have some sequence of steps, right? They will follow with the same sequence of steps from open on 1st April and before closing of 31st March, year end, right? They will process the same again in the next year. They will start with the same first step and close with the 6th step or 7th step, whatever it is. So the process will be there continuously. So that process we call accounting cycle. The process of maintaining the books of accounts every year, the process which involves in maintaining the books of accounts every year. Okay, that process is known as accounting cycle. Clear? What do you mean by accounting cycle? Every business across the globe, they will follow this few steps. Okay, the process which involves, okay, okay, some steps, and that process we call it as an accounting cycle. For example, what is accounting cycle here? First of all, here how in India, whatever may be the country, first step they will do identifying the transactions. First step, identify the transactions. So now, how many types of transactions we have? How many types of transactions we have?
Three.
3.
3 types. So we need to identify whether it is a cash, credit, or non-cash. Okay. After identifying the transactions, okay, next one, those transactions will be recorded. Those transactions will be recorded in a book, right? Serially, we will record. Okay. In accounting terminology, we call it as a identifying the next one, classifying the accounts, identifying the transactions, classifying the accounts. So what do you mean by that? For example, I'll take one transaction here, purchased goods from Ram. Okay, but okay. Paid cash to Ram. So what kind of transaction?
Cash
Cash
transaction.
transaction.
So we have identified, correct? We have identified. And what are the accounts involved? You know that, right? There are 3 types of accounts: personal account, real account, nominal account. I think we have not yet covered nominal account, but still, personal account, real account, and nominal account. So what are the accounts involved in this?
Personal account.
Personal account.
Just tell me, what is the account involved? Who are the accounts involved? One is Ram.
Personal.
No. What is it?
Ram.
Next one.
Cash.
Yes, cash. So Ram is what?
Personal account.
What kind of person? What kind of person?
Natural person.
Natural.
Natural.
So comes under which account? Natural person comes under real account, nominal account, or personal account? Three types.
Personal account.
That's what I want. Personal account. Correct? Cash.
Real account.
Real account.
Right? Current asset or a fixed asset?
Current.
You're saying in confidence or any question? Next one. It's real account. Correct? Next one. Next. Cash deposited in bank. Story. What are the accounts involved?
Cash and bank.
Perfect. Cash. Everyone accept, right? Cash and
Yes.
bank. So cash. What type of account is this?
Real account.
No. What? Why it is a
Cash.
real account?
Current
Current
asset.
asset.
Current asset. First, we need to classify like this.
Okay.
Next one, it will come under.
Real account.
Right. Next one. Bank.
Fixed asset.
Bank.
Same current assets.
Current asset.
Bank. Did I mention? See, what did I mention? Bank balance.
No.
No.
I said bank. Cash deposit.
Personal account.
Personal account. What kind of person?
Artificial.
Artificial.
Artificial person.
That you need to manage. Okay. Comes under
Personal.
personal. So for non-commerce people, it will be a little challenge initial stage, but I'm sure I'll make sure that you will be in a track on this. So now you identify. So first, what we did, we have identified the transaction, whether it's a cash transaction or a credit transaction. Next one, we have classified, right? So whether it is a personal account, whether it is a real account, whether it is a nominal account, right? Identifying the transactions, classifying the transactions. Next one, recording the transactions. Recording the transactions. I'll tell you in our next session. Recording the transactions. Recording the transactions. Okay. So we need to record it. Now we have identified, we have classified. Now we need to record in the books of accounts. We need to record in the books of accounts. What we call that, that we will discuss in our next session. Next one. Okay. Posting. We have a concept called posting of the transactions. I'll tell these terminologies. Posting. Okay. And after that, what is the step we'll do is preparation of trial balance. Okay. Preparation of trial balance. Next week, we are going to discuss all about this and we will close our accounting concepts. Trial balance. And after that, once at the year end, once the year end, right, in the month of March or February ending, we will about to close our books of accounts with the preparation of final accounts. Final accounts. I'll tell that what do you mean by final accounts, why it is known as a final accounts, right? So all those stuff next week we are going to discuss. Now understood what is an accounting cycle? Every year we'll start with identifying the transaction, classifying the accounts, recording of the transactions, postings, preparation of trial balance, and preparation of final accounts. So once it's done, then that is nothing but year is closed. Then again next year, we'll start from identifying the transaction, classification, recording, posting, trial balance, and final accounts. Every year we will do this process only. So the process we know, we will call it as an accounting cycle. Across the globe, we will follow the same. Not only in Indian companies, all the businesses, all the companies across the globe will follow in the same cycle. Clear? Remember, it will start with identifying the transactions, the year, and it will ends with preparation of final accounts. And the between process, we call it as an accounting cycle. Clear, everyone? Any questions? So what is trial balance? Majority knows, but still I'm going to take it. What do you mean by These two steps you understood, identifying and classifying, right? And a recording of the transaction we will see in our next 2 week sessions. And what do you mean by posting? What do you mean by trial balance? And what do you mean by final accounts? That we will see in our next 2 week session. Okay, I'll give a pause here. Any questions from your end? Any questions? Anyone have a questions?
No, sir.
No.
Yeah, thanks. So this is, again, I'm telling you, this is not relevant to SAP, but still we need to have a knowledge on this. Majority people have a knowledge, but still it's compulsory to refresh our basics. Okay. Thanks all. See you in next week session. Meanwhile, I'll share this material recordings. Please go through once. Okay. But mostly the next week, next Sunday, if possible, we'll start with the SAP. Already we have done with the organization structure. Now we will start in designing in SAP that organization structure. Okay.
Mhm.
Okay.
Okay.
Yeah.
Thank you.
Okay, Navin. Thank you.
Thank you.
all.
Thank you.
Navin, do I need to coordinate with Vinod and everyone? So for this,
Not required as of
required.
now because they have already done.
Okay.
Yeah, they have already created their user IDs and passwords. So nothing. If anyone is there, then definitely I'll ask you to approach.
Sure, sure.
Okay. Thanks. Thanks, Ramakrishna. Any other questions from anyone? If no, good to go. Then happy weekend. Thank you.
Yeah, thank you, Navin.